What's up, guys? Eric here, Mr. Fired Up Wealth live stream. So you never know what's going to happen here. Just want to do a question and answer, bring some information to the community, bring some knowledge. Hope you guys are doing well. I haven't done a live stream in a little while. We do these all the time in Patreon and Discord. Wanted to bring one to the YouTube community. So it's Friday. Happy Friday. Hope you're doing well. And what we're going to do is I'm going to go through some question and answers. And I'm actually going to show you my top 18 holdings in my portfolio. I'm also going to give you my portfolio balance and my taxable brokerage so you can see exactly how much money is in there. And I'm going to go through my top 18 holdings, my top 18 stocks, and talk about each one briefly. Before I do that, we're going to go through a Q&A session. I've got a bunch of questions from the community. If you have additional questions that you didn't ask before, basically I prepared for the live stream, you can ask questions over in that chat. I'm going to turn this music off. So on the top right-hand side, we're in the live stream chat. You can ask questions in there. I'll do my best to answer. It's going to be hard to manage both. I do have a couple moderators in here. There's also a comment section in the top or the bottom left-hand side below the video. So two different chats. One's for the live stream. One's for later on. This is recorded. You can come back. If you are new to the channel, please hit the subscribe button. Give me a like, subscribe. When you hit the subscribe button, there's a little bell to get notifications. Click that little bell so you get notifications. I release videos every Tuesday and Thursday, and also hit the like button. I appreciate that support very much. So you guys hear me okay? Everything good? Have a great weekend. Thoughts on Fastly, Hawaiian Shirt Day. Well, at least you can see me, so that's good. So let's get going on this. Now, if you've got questions, try to put them in that chat. I'll do my best to get to those. I've got a bunch of questions that are populated on this slideshow. The first thing I want to do real quick, because I brought Snowflake to YouTube. There's several stocks that we've brought to YouTube. You think of Palantir, you think of Snowflake, several other stocks that we've brought, really to YouTube. So I wanted to cover this one and just cover the earnings. We had earnings a couple days ago, very strong. The thing that really sticks out with Snowflake, guys, that net retention, that net revenue retention, NRR, 169%. That's a massive number. Just under 5,000 customers, revenue is starting to accelerate. We did get over $300 and we've pulled back a little bit today. Really strong day overall. Had a really good day on the portfolio. Jerome Powell basically was speaking today saying that, he thinks inflation is transitory. And essentially they're not gonna do anything too aggressive to have a taper tantrum. So that's obviously bullish for the overall market. So out of the Fortune 500, 212 customers. I've got some other notes here. So out of the Global 2000, this is from the Snowflake earnings call. So they're focused right now on international as well. So not just the Fortune 500, but the global, they're calling it the Global 2000. So the largest 2,000 companies in the world. They're currently working with 462 of the Global 2000. So that's really, really positive. As far as the NRR, we talked about that 169% net retention rate. A question was asked by several analysts in the earnings call. I listened to that. And the question was, are you going to be able to keep that ridiculous 169% NRR rate, for very long? When do you see that decelerating? And on the call, they essentially said that it will slow down at some point, but they're still expecting 130 to 140% NRR over the long term, which is pretty impressive stuff. So we've got lots of questions. I'm probably not going to get to them all. It is Hawaiian Day, of course. Friday, happy hour day. Hopefully you've got, I've got a Coca-Cola here. Hopefully you guys have a beverage as well. Also have the Rockstar grape. I'm not sponsored by Rockstar or by Bang, but I wish I were. So hope everything is going well. So stay tuned for my top 18 holdings. Of course, follow on YouTube, Twitter, Facebook. I'm most active really in YouTube and on Twitter. There's a lot of Twitter updates. If you think of like earnings and things like that, I'm usually constantly updating stuff on Twitter as well. So if you don't want to pay to be in the Discord, Twitter is a great alternative for free. YouTube, of course, I bring new videos every week. We've got a Facebook group. It's not really as active as it used to be. It's kind of moved over to the Discord, Patreon. Instagram, I haven't really figured out how to use that, and be productive. In TikTok, I'm trying, but that's not, my style is not 30-second clips. So So far, it's been kind of a journey. I've got like 200 followers on TikTok, and it's not something I'm really focused on, but follow on all platforms. So Q&A, these are the questions I got ahead of time. This is preferred because I can put it on here and make a nice slide presentation for you so you can see the question, and I'm going to give you answers as we go. So let's get this one out of the way, guys. I need a drink before I even answer this one. You guys doing good? Genomic stocks is on here. We'll get to that. No bang. Not today. These were on sale. It's got what, 240 megagrams of caffeine. You guys don't care. So Val, anybody that asked the question ahead of time, I mean, it's kind of cool. You're getting a shout out right here on the live stream. So Val Al, a week ago, Eric, you really talk about Chinese stocks. Can you please share your opinion on the biggest Chinese tech giants and whether a risk associated with them is worth it at this moment? Thanks. Okay. Fair question. I appreciate the question. You're not going to like my answer, and it's okay. I'll be completely transparent. You know, the thing about it is every investor is different, and honestly, you got to do what's best for you. I think there's some opportunities in some of these stocks. You think of Alibaba and you think of the valuation, you think of the potential there. I think there's opportunity for the right person that understands the risk behind it. And I say this all the time, and I think it's hard for people to grasp it, okay? I've been investing over 20 years. I've made my millions between real estate and the stock market. And part of my job at this point, guys, is capital preservation. I don't want to lose the money I've worked so hard to gain. And so I generally am pretty risk adverse. Now, I've got some high flyer stocks like CrowdStrike, Snowflake, but that's my background, SaaS, and I have a lot of conviction and confidence in those areas. So even if I'm wrong, I still feel good at night. I sleep well at night, Swan stocks, owning those type of stocks. And later I'm going to show you my top 18 holdings by weight, and you might be surprised with some of the stocks that are in there. But I want to go through these questions. I'm not in a hurry here, guys. I hope you guys can stick around for a while. If you can't, this is recorded. Come back, watch as many times as you want. I think there's going to be a lot of information in here, a lot of great insight, a lot of opinions. But over 20 years of investing, I've kind of made my money. Part of my job is that capital preservation. So I sold most of my Chinese stocks in 2019. Now, I want to be clear on this. I made a lot of money on Chinese tech stocks. And at one point, I was overweight Chinese tech. So I'm not a China stock hater by any means. But when there's so much poor sentiment, it's really hard. I don't have the conviction because I really don't know what's going to happen. More than likely, it'll be fine. But there was just some recent news on IPOs and China basically cracking down on those. There's another question about China we'll get to later. But the answer is that there are a lot of stocks in the universe. And I try to focus on high quality US companies for the most part now. I'm not against investing internationally. I own C Limited. I like, Mercado Libre. There's several of stocks that I do like. I think that there's opportunity there. Okay. I think that for the right person, the right risk tolerance, the right portfolio, that there could be opportunity. I think there's going to be some pain that's still going to come from these Chinese stocks. I don't think it's over quite yet. But at the end of the day, you got to do what's best for you. So I'm not jumping into these right now. I said that if Alibaba went to below $200, that I would consider adding it. I'm just not completely comfortable with the situation right now with the politics and the geopolitical risk around it. And again, if you're younger, you can take more risks than I can, right? I'm in my early 40s. I'm financially independent. I'm in a different stage in the game. So when I show you my portfolio later, you're going to look at it and say, well, why do you have this stock? Why do you have that stock? Well, because I don't have to hit a home run every time. I'm okay with doubles. I'm okay with singles. I just want my money to grow over time. I focus on these hyper growth stocks in the channel, and a lot of people might have those as heavier, concentrations in their portfolio. And I did the same thing when I was younger. When you're young, you take risks, you invest in growth. At least I did. You build that wealth. As you start to accumulate that wealth, part of your job is, again, preserving that wealth. And the whole philosophy behind Fired Up Wealth, financial independence, retire early with dividends, is you outperform the stock market, you sell some of those profits, convert it into blue chip, high quality, lower risk, moat type companies that pay dividends, and then you can essentially live off the dividends and never have to sell the stock. The dividends aren't reinvested, so you're not getting that. You're not getting the drip. but the actual share price is still appreciating over time, and you're getting a raise on your dividend. You're actually getting, dividend growth investing. You're getting an increase in that dividend each year. You're getting a raise essentially each year that's going to outpace inflation. So that's kind of the end game, and I'm more towards the end game. You might be at a different, in a different spot basically on the journey, and that's okay. I've been where you're at, and I try to help people get to where I am. But my portfolio might not look the same as yours, and you have to understand that. So do I think there are opportunities in Chinese stocks? Yes. Do I think there's still risk? Yes. Hopefully that helps. And here, this just happened. This was yesterday or this morning. China plans to ban U.S. IPOs for heavy data tech firms. After the Chinese ride-hailing giant Didi made its Wall Street debut, Beijing said it's going to tighten rules for homegrown companies looking to raise money overseas. So there's some risk there, guys, and we don't have an end to it yet. There's some risk there, and that's the best way I can put it. But I think there's opportunity again for the right person. So don't hate me for telling the truth. I'm just being honest, and I'm not saying you shouldn't invest in them. I'm just telling you what I do. This question is actually kind of funny. So what is your highest conviction stock in the short term, less than 6 months? Now, I actually eliminated some questions that were just, I didn't think they were good questions. I don't really think this is a great question, but at the same time, there's no question that's a bad question, and I want to explain what I'm talking about. So what's your highest conviction stock in the short term? I'm a long-term investor. So if I'm buying a stock off of a story, I'm trying to hold that stock for 5 or 10 years. I'm not really thinking about 6 months. So 6 months is really a trader mentality. It's a swinger mentality. And what that reminds me of somebody like, I want to buy a house in 6 months and I've got 100 grand. How do I turn it into 120 grand? Or some people, how do I turn it into 300 grand in 6 months? The reality is you probably don't. My first rule in investing, I have 15 investing rules. I should have put it on the screen. I didn't, but I've got a top 15 investing rules. Number one rule, don't invest money that you can't lose, that you can't afford to lose. So, high conviction stock in the short term, I don't have a crystal ball. I can look at a stock and say, this company is going to be worth a lot more in 5 years. But everything I do, like the 40, 50, 60 hours of effort I put in every week to research stocks in the stock market is not geared towards 6 months. It's geared towards 5 years. So I don't really have a good answer because this is not my objective. And the reason I wanted to answer this question is I think it helps shed light. There's a lot of people that want to get rich quick. It's not easy to do, guys. If you can do it, great. And I'm not against trading. I have a trading account. I do some trading, but it's a portion of my assets. It's not my focus. I'm a long-term investor. I like to buy and hold, dollar cost average. Trading, flipping, meme stocks, YOLO. There's nothing wrong with that. I'm not judging it. It's just I'm past that stage of the game. I used to do the same kind of stuff when I was younger. I'm not doing it anymore. So I'm not thinking 6 months. I'm thinking 6 years. And if you think of like a Kathy Wood and an ARK, they're thinking the same way. They're thinking 5 years. And that's why there's a disconnect when people are like, oh, my ETF is down. I just bought it in 2021. Well, it's outperformed the QQQ over 5 years. It's just they're thinking 5 years and you're thinking 5 weeks. Different mindset sometimes. How should someone approach a retirement portfolio versus their growth investment portfolio? This is a really good question. Example, risk appetite, dividend, retirement versus growth. Cheers. So what I do, it doesn't matter, you don't have to follow what I do. I'm not a financial advisor. Everything I tell you in here is my opinions and just information. You guys, at the end of the day, you have to do what's best for you and what's best for your portfolio. What I've always done, well, not always done, what I've done in recent years, because I used to invest in individual stocks. I used to even sometimes trade in my retirement accounts, not aggressive trading, but at swing tradings, things like that, swing trades. What I do at this stage in my life, what I would recommend, what I generally tell people is if you're going for financial independence, you're probably going to need a taxable brokerage. So all the stocks that I talk about on the channel, that I talk about in Discord, that I'm going to talk about today later when I give you my top 18 holdings, those are just my taxable holdings, okay? That's my taxable brokerage that literally can bridge the gap from now until retirement. I could literally not do it, another thing tomorrow, not work, and I could live off that money. Obviously, everybody's got a different goal of how much money they need. Some people need $10 million. Some people need 500 grand. So it just depends on the person, your lifestyle, your budget, all those different things. But what I like to do, guys, is I like to have my retirement accounts in ETFs, and you can still invest in growth. You can invest in things like, ARKK ETFs, bets for legalized, gaming. You've got MSOS, right? There's all these different things that you can play for these secular growth trends, these themes like SMH or SOX, SOXX for ETFs or for semiconductor ETFs. There's lit for lithium. There's the ARKK ETFs, PBW. There's on and on and on. Even if you want Chinese stocks, there's the KWEB, right? There's the CQQQ. It's the Chinese QQQ. And it's funny because today my retirement portfolio is up 1.75%, and it's all ETFs. So I've got aggressive ETFs. I've got growth in there. And what I like to do is I like my taxable brokerage. I like to have mostly individual stocks with some ETFs mixed in. You'll see what I mean later when I show you my top 18 holdings. But to answer your question, I think that it makes sense in retirement to have ETFs. You can play secular growth and aggressive growth with ETFs. And it depends on your goals, because some people don't have a taxable brokerage, and you might want to work to 65 and you don't need a taxable brokerage. Well, then you might have a completely different makeup in your retirement account. That's why investing is individual. And just because I do something, it doesn't mean it's a good fit necessarily for you, but that's what I do, and hope that helps. Matt Payne, I would love your take on genomic stocks. So I think we already had that question. We're getting a lot of great questions, and I appreciate it. I'll do my best to get to some of these questions here in a few minutes. I'm going to go through all the questions that I have on this slide deck, and then I'll go over to the chat. I've got another screen over here, and I'll try to get through as many as I can. I would love your take on genomic stocks. It seems like it could be a huge industry in the future. CRISPR seems to lead the way in name recognition. How about Beam and others? Is there a genomic stock that is setting itself apart from the rest? Is it too risky to say at the moment? Thanks. Great question. I love questions like this. This is an intelligent question. So you've probably heard me say this before. If you've watched, there's a Kodiak Sciences video that probably only got like 2,000 views because it's a company that's no one's ever really heard of. That one's kind of in this space when you think of that biotech type space. Not really a genomics necessarily. It's dealing with a whole different thing. But anyway, it's kind of in that same genre. So what I like to do, guys, and I've said this before, I'm not an expert in biotech, okay? I don't try to pretend to be somebody I'm not. Now, we've got some really smart people in Discord. We've got a biotech channel. So in Discord, if you're not familiar, if you're not in Discord, we've got different tiers. So Elite has, channels that are hidden from other, tiers. There's different tiers. Depending on the tier you're in, there's more channels that unlock. The basic tiers, if you go in right now, there's a $10 tier that will give you access to my top 29 holdings in terms of granular rankings. So I rank them by moat and by safety score and growth and all those different things. I've got a video, and that'll also give you the first tier of Discord. And in that, there's a channel for esports and gaming, for genomics, for semiconductors, for cloud, and so on. All these secular growth trends that I talk about on the channel. And we've got channel leaders. Okay, so the Discord community is not just about Eric. It's about a community of investors. And there's a lot of smart people in there. There's people that are smarter than I am in certain areas. And so Virus Emmanuel runs that channel in our Discord, and he works in that field. He's a medical guy and understands that stuff better than I do. What I personally do, I own Twist Biosciences, just one that I thought was interesting. A lot of people like Pacific Biosciences, PacB. I own ARKK. The way I explain it to people, there's good stocks in there. There's probably bad stocks in there. And there's any secular growth ETFs that way. There's going to be good stocks and bad stocks. But I trust that ARK is going to do a better job actively managing a genomics, trend ETF than I can do myself, because I've never worked in that background. I don't pretend to be an expert in stuff that I don't understand and don't know. My background's in SaaS. You talk about high technology, you talk about semiconductors, and you talk about software as a service. I understand it. I've worked it. I've breathed it. I've touched it. Genomics, no. It's just not my background. So why would I have and this is something I teach in the master class about overconfidence effect. Why would I have the overconfidence effect that I can do a better job than ARKK when they have experts that literally, understand that field and that actively manage. If you can do better than them, great. But me personally, I just own ARKK, and I don't even own it in my taxable. I own it in retirement. It's a portion of my retirement fund. And that's how I play this sector. I think it's a huge secular growth trend. I like it a lot. But for me to play individual stocks, it's just too risky because I just don't understand them, period. And I'm a Peter Lynch guy. Peter Lynch, invest in what you know. And you might think it's crazy, like, well, Snowflake, Palantir, CrowdStrike, all these stocks that I like. But I know them, and I've worked in them. I've worked with them. I've worked in that industry, and I understand them. And I understand the business. I understand the components that makes a business successful. I understand the leadership. I can't say that about genomics, and therefore I play it through an ETF. And I'm not saying that you have to do the same. I'm just answering the question as honestly as I can. All right? How you guys doing? Is this helpful? Am I talking too much? Talking too fast? Do you like Beyond Meat and the Oatly stocks? What do you guys think? Do you guys like these stocks? Do you guys like Beyond Meat? Do you like Oatly? Let me know. I'm reading the chat. Really appreciate the content you share. Look forward to your videos every week. Hey, I appreciate that. I'm probably going to miss a ton of questions, James. You're doing your best over there. I'm going to try to read through those once I get through these. So Beyond Meat, I owned it for a while. It was a spec play. I decided to move on. I like that trend of plant-based. Oatly kind of, fits in that same sort of genre, but obviously different. Oatly was too expensive for me personally. I didn't see the moat there necessarily to invest in that. Beyond Meat, I did own for a while. I made some money on it, but it wasn't a banger. It wasn't a runner really. I made a little profit and kind of moved out. It's again, one of those things I don't understand it as well as I should. So why put my money in Beyond Meat when I can invest in Cloudflare at $35 and know that I'm going to have a good return, Cloudflare, that stock's actually funny to me because now I go on Twitter and I go on YouTube and whatever, every video and every tweet I see, it's like buy Cloudflare at 100 and whatever the hell it's trading at now, $130. It's like we were buying it in Discord at 30, 35. We started at 40 and it came down to 35, 33. And nobody was talking about it. They were all pumping Fastly. And I think that was one of the questions. Are you still bullish Fastly? I think Fastly will be fine long-term, but if you want the best of breed in that space, it's Cloudflare. And if you want to understand more about why I think that, check out the Cloud Stock playlist on the channel. There's a top 10 cloud stock. It's like an hour and a half worth of content. And it goes deep dive in that space. And it talks about Cloudflare and why it's the best of breed and why it's superior over Fastly. And back in August in Discord, in Patreon, I told people I'm selling my Fastly at 110 a share. I'm going to use that money to buy, Cloudflare. And everybody thought I was, not everybody in the community, but outside of the community, like in Facebook, stuff like that, people thought I was nuts. Obviously, it turned out to be a great play. And I'm not right every time, but there's been some really good calls over especially the last couple of years since I started doing YouTube. And not every call has been right. But there's been some really good calls that were against the trend and against the grain. And that's really the thing about Fired Up Wealth is that we're doing our due diligence and we're trying to make decisions that make sense to us. And it might not necessarily be what the masses think, but a lot of times we'll get into these stocks ahead of the masses by doing it that way. And the community itself, you should see, if you've never been in our Discord, the amount of due diligence that's done, not just by me, but the entire community. I mean, it's absolutely insane how much effort goes into that Discord and how much information is in there. And, some people join and they're like, this is too much information. It's like, well, it's like a buffet. If you go to a high-end buffet in Vegas, you can't eat every single thing on the menu. You can't have every single thing in the buffet. You pick what you want and you consume that. And that's the same way with Patreon and Discord. But anyway, I digress, but I decided that this was just not something that I knew enough about. It's very speculative and I decided to move on from it. But I'm not bearish against it or anything. I like the overall trend. I think, there's going to be winners in this space. Beyond Meat seems to, to have a nice following. So I think that the stock probably can do well longer term. I just don't currently own any of it. Back to China. Do you think the U.S. government will ban Chinese products in the future, 10 to 20 years, as a way to protect the U.S. economy? It's possible. I mean, it just depends on the relations. A lot of people thought that, with Biden, that we might have better relations with China than the previous, administration, and that's not really panned out or proven itself to this point. So, I don't know. I guess to answer your question, it's possible. Do I have like a strong feeling one way or the other? Not really. I mean, I think it probably will work itself out with time. There's definitely some tension there. But at the end of the day, I don't think China wants to like ruin all of their mega, cap tech stocks. Like, I don't think the Chinese government necessarily wants Alibaba to go out of business or anything like that. And so they're going to do everything they can, I think, to stop that from happening. But to answer your question, do you think it'll happen? It could happen. Do I think it? Not necessarily. I'm kind of neutral on it. So, good question though. I like the dicey questions, and I'll do my best to be honest answering them. What else we got? Do you think a market correction is coming soon? It's a good question. What do you guys think? The thing about it is this, okay? So the number one thing that can bring the market down, we saw it earlier this year, is going to be Jerome Powell and the Fed. They start doing, interest rate increases, and if you start seeing inflation, so inflation's part of it too, but it really comes back to the Fed and how they handle the inflation, right? Now today they were pretty overall dovish, and I thought, I listened to Powell, and he seemed very like, hey, inflation's transitory. We're not going to, rush anything, et cetera. That's what you want to hear as an investor. So do I think a market correction is coming soon? I think it's always possible. I mean, we're running hot. If I showed you a chart of the NASDAQ right now, we're running above the 50-day moving average, the 100-day, the 200-day, the trend lines, like everything, right? We're running hot on a lot of stuff, a lot of stocks, the indexes, everything. So could we see a pullback anytime, garden variety? September is historically a really bad month. Could we see a 3 or 5% sell-off? We could. I mean, does it have to happen? No. And the nice thing about being an investor and having the psychology of like, my stocks might go down short term, but I don't need the money for 10 years. Once you build that discipline, you don't really care about this so much. People are so focused on like trying to time the market and like, is there a correction? Should I trim this? Should I do this? You're never going to win that game. And you've seen it. Look at like March 2020, the people that thought I was going to go lower that sat in cash, they're all still in cash, and they're all, bearish and saying that, everything's too expensive and they're bitter at life. Well, I'm sorry, but we're probably not going to go back to March 2020 prices anytime soon. I mean, could it happen? Sure. Anything's possible, but I'd much rather be in the position I'm in now, being up 100% from that point. The market could drop 30%. I could sell everything and still be way ahead of what I would have been, selling. A lot of people selling back at the lows of March 2020. So I don't try to time the market. If you understand my methodology, I always like to have some cash, 5%. Sometimes I do shave and trim when things get frothy and increase that cash closer to maybe 7, 8, 9, 10%. But overall, if you have 5% cash, and a market correction happens, generally you're going to get some good opportunities on some high quality stocks. And in a couple of years, you're going to look back and say, hey, it was a good opportunity. Eventually, we're going to hit a bear market. I don't think it's going to happen tomorrow. I think it can happen, in the near future. But when I think of a correction is 10% or more. So when you think of a true definition of a correction, that's 10% or more off the major index. I think that's probably going to happen sometime next year. And it doesn't have to happen, but I think that if you look at the sentiment and you look at everything's going, it's healthy to have sell-offs. So if we have a 3% or 5%, they call it garden variety sell-off in September, I don't discourage it ever. I always embrace that, embrace corrections. It's one of my top 15 investing rules. And I'm just going to load up on some of the stocks that I don't have enough, shares in, and I use it as an opportunity. So once you get into that mindset, it makes it so much easier because you're thinking about 2030 and not 2022. And that's what I recommend you do. And I try to teach all this stuff in the masterclass series. There's a new tier on Patreon. I don't need to push this stuff. Like if you have no interest in it, that's fine. I really don't care, but it's there. And I wish I had it when I was, 20 years ago. I'd be way wealthier now than if I had that knowledge back then. But there's a new tier. I think it's $40, and you get access to masterclass. There's 11 hours of content, 12 videos, teaches you everything from A to Z, options trading, psychology. I mean, everything you need to know. And there's probably people in this chat room that are in the masterclass that could tell you, feel free to talk to them and see what they think, because it doesn't really matter what I think. It matters what other people like you think. And I think it's helpful, though, and something to check out. That psychology and discipline is one thing I talk about. And most of the time when you hear psychology and discipline, it's traders, not investors. But It's just as important for long-term investors as it is for traders. Excuse me. So Marius, possible ideas or questions for the live stream. Now we're getting to personal finance. That's the cool thing about this channel, guys. We talk about growth stocks a lot, but this is really just about, financial education, personal finance, outperform the market, and early retirement, enjoying life. So this channel is diverse. It's a really financial independent channel, but in a different light. It's not a lean fire. It's more of a get after it, make a ton of money, and enjoy it, retirement in a big way, more of that fat fire lifestyle. So Marius is saying possible ideas or questions for that live stream. After maxing out 6,000 in Roth IRA and QQQ ETF, so you have all 6,000 in QQQ? Okay. Should one always max out their work 401k? Now the key here is it says no company match, almost 20K or start. So if you can actually invest in a Roth, definitely, in my opinion, again, I'm not a financial advisor, so I'm just going to tell you my opinion. I think you max out a Roth. Now, for me personally, it depends. Again, if you're going to try to retire early, you're going to need some sort of income to bridge the gap between early retirement and retirement. So when you think of a 401k, you're not going to touch that until you're, 60 years old or 59 and a half, in your retirement age, whatever it is, right? So if you're going to try to retire at 45 or even 50 or even 55, you're going to need some sort of bridge. And so it depends. If you're trying to retire in your 30s or, and when I say retire, guys, I don't mean like watch TV. I'm talking about financial independence. So most people that I know that are financially independent, they still work. They have businesses. They still do stuff. They're not just like sitting around on their butts all day watching TV. It's about the FI, the financial independence, more than in the retire early part. But I would max out a Roth IRA. If there's a company match, I would put the money in to do the match up to the max. But if that max is only six on your first $6,000, I'm only going to put $6,000 in to get that free money in the match, and then I'm going to put it into an individual taxable brokerage. That's just me because I want the money. I want to, at 40 years old, I want to be able to do whatever the heck I want. And so, if that doesn't matter to you, then you might want to max out a 401k. This is why investing is very personal, and you have to make that decision on your own. And if you need help, there's financial advisors and tax professionals and all that stuff, attorneys that can help you with that kind of stuff. The other question he has, some simpler paths to wealth would suggest that a positive 8% annual rate of return is great. What could you describe as the fired up wealth targeted or anticipated rates? That's a tough question because, again, it depends on the person. I've got people in the fired up wealth community that only invest in dividend stocks. And they're not going to get a 15% return a year very often, maybe in 2021. But it's really going to depend on the person, and every year is going to vary. I think that it's possible. It's definitely okay to assume that you can outperform the market if you're investing in growth. But you have to remember in a bear market, those growth stocks can get hammered too. So this is a tricky question because it's kind of putting you on the spot. Like, what do you think that, it's hard to say. What I will say is that when I do VIP calls, I've got a VIP tier and I do one-on-one video mentoring, right? And almost every single person has that overconfidence effect that I teach in that psychology masterclass, where it's like, oh, I started investing in 2019 and I've averaged 60% annual returns, so I can easily get 40% the rest of my life. If you can do that, that's really good, okay? But, Peter Lynch is a legend and he never got anything close to that. Warren Buffett, I can go on and on. Nobody's averaging, 30, 40% a year. A super chat. Okay. James, I appreciate that. So I've got HTBoy41 sent a super chat and I want to give you a shout out. So thanks a lot, HTBoy41. I appreciate that very much. But when you think about, what the hell was I talking about? Who knows what I was talking about, right? But the end of the day, guys, it really is case by case. It depends on really what your goals are. And this is why it's important to have I call it a blueprint. So you have to have a blueprint to understand, and I say this in the masterclass too, but like, if you're going to build a house, you can't just go start putting lumber up and put a roof on it. You've got to have plans, like detailed plans of how you're going to get to the end product. That's called a blueprint. And it has all of that data that you need to make the house come to fruition. Your portfolio is just like building a house, and it's really going to be dependent on the person. So every single person that's in here right now watching, your portfolio is going to be slightly different than the next. You might like the same stocks as a lot of the people in here, but your goals might be completely different, and you might actually need to adjust your portfolio accordingly to match that. If you need the money in 2 years versus 20 years, you should be invested completely different than that other person. So in terms of percentages, rate of return though, you're not going to get 30, 40% a year. I mean, if you can, great, but you want to be realistic. If you put something in like 12%, 10%, I recommend doing like a 10% to be conservative. The worst thing that's going to happen if you're making a plan and you plan for 10 and you get 15, well, that's a really high quality problem to have. If you plan for 15 and you fail and you get 10, that's a really bad problem to have. Okay. So be as conservative as you can on those numbers. Obviously the goal is to outperform the market and to do that consistently year over year, but you're not going to be in a bull market for the rest of your life either. So just be aware of that. Just be smart and be conservative when you're using these estimates. Opinions on Sofi, long, 1,000 shares. It's lower than it should be. And, at $14, it seems like a heck of a buy, but what do I know? It's one I've been wrong on. I bought it a little bit early. It's one of the I've got like 3 stocks in the portfolio that are red, and that's one of them. I've got, just a handful of stocks. I've got 97 positions. There's only a few that are red. Sofi is one. Open Doors one. Thanks, Chamath. So I'm not blaming him. It's my fault. Don't ever blame anybody else. But it is interesting that, all those SPACs just got hammered. But to answer your question, I'm long on both of those. I still own Open. I own Sofi. I'm not selling them. GLBE, I've covered that one. And the top 10 e-commerce stocks for the next decade or whatever the hell we called it. I started looking at that stock in the 30s. Now it's $72.78. I've done that with like 4 stocks this year. Confluent, I wanted to buy it at 40. I didn't buy it. It runs. Sometimes it happens. You just have to be patient. Wait for it to come back. Unity did the same thing. Unity ran from like 65 in the IPO to 175. I was patient, but not patient enough. I started buying at 125. Dollar cost all the way down. I've got like $100 cost basis. Now it's a healthy position. Would have been better to wait for the bottom at 85 and put all your money in that. Yeah, but it never really works that way. Dollar cost averaging over a course of 2 decades, it's proven itself time and time again. It's not right every time, but it's right more than not. And if you buy on technical levels and use pivot points, you use support levels, it's a really hard game to lose. And I love games that are hard to lose. I like to win, so you can really, if you have that discipline and understand the game, you can position yourself to win longer term. And that's what we're trying to do here, guys. So both of these stocks, I like them. I don't own GLBE. I think it's crazy expensive here, but, maybe I'm missing something, but I think it's trading higher than Shopify's valuation right now in price of sales. So it's just like Sentinel-1. I like Sentinel-1 too, but man, things trading at, how's it trading at right now? It was trading quite a bit of a premium to CrowdStrike, $64.90. The price of sales is quite a bit higher than CrowdStrike's, and I'm just not sure it deserves that high of premium. I'm not bearish on Sentinel-1. I'm just not sure about the price right now. So we'll see. We'll see if it ever comes back to me or not. Maybe it doesn't. All right. This is James. So James is one of our moderators. He's also, you can see James Long is one of the moderators in YouTube. He's also a moderator in Discord. Does a great job for the community. And shout out to James. For a young investor that entered the market at the start of 2021, any advice to improve the portfolio moving forward? This is a general question asked because finding stocks that are a good value now is harder than 8 months ago. You know what? You can say that about anything. It was cheaper to buy Amazon 8 years ago too. When you're in a bull market for 10 years, that's kind of the trend, and that's not going to last forever. We're going to have a bear market, and it probably will be coming sooner than I want it. But, and I'm not trying to scare anybody, and that's not FUD. I'm just, we got to be realistic too, man. We can't go up every single day for the rest of our lives. That's not going to happen. So for a young investor to enter the market, you really need to educate yourself, because if you're chasing, you're like, hey man, I'm going to go for the highest growth and I'm going to buy, and if you get in the wrong, crowd too, I got to be careful what I say here. Let's just use the word meme stock. Like, let's say you have a portfolio of meme stocks, that might work out for you, but it might not. Even the stocks I like, you go out and buy, SentinelOne and GLBE and all these stocks that are like crazy valuations and don't understand how to value a stock. And then they lose half their value and trade sideways for 2 years. You're going to get frustrated and sell and say the stock market's rigged and blame everybody else but yourself. That's generally what happens, because we as humans, like, I could tell you 10 stocks to go buy. You could go buy all 10. If 9 of them are winners, I'm not going to hear anything. But if one's a loser, you're going to come on the channel and say, oh, I bought that stock. You said it was a good stock. That's just how human nature is. But in terms of answering your question, James, for a young investor that entered the market, any advice to improve the portfolio? You really want to have some cash, and you want to understand what you're investing in. Try to be disciplined. Don't chase stuff. Wait for it to come to you. And that's what we do in Discord. You look at like even a boring stock like Salesforce. It got no views. It made me really sad. It's like, Microsoft in 2013, I was buying that and nobody wanted to touch that stock. Nobody wanted to talk about Microsoft in 2013. A lot of you might have been investing in 2013. Now it's up 600% and everybody wants to buy Microsoft at $300. Well, you could see the vision that they were going through with cloud. And it's not like you had a crystal ball to know exactly where it was going to go, but you could see the improvements the business was making, and that's when you invest in the company, right? And that's what we try to do. We try to find that ahead of the curve and invest in those stocks. And you invest in stocks that have a lot of upside potential where the masses aren't chasing them. And you wait, you buy those when they're on sale. Salesforce is a good example. No one wanted to touch it at $220 or whatever. And now it's, $265. And I think that things go 300 plus. Now it's not hyper growth or anything, but you can do that about a lot of different stocks. While people are chasing Fastly, let's go buy Cloudflare. While people are chasing SentinelOne at higher prices, buying CrowdStrike on sale, whatever. But I think that's the biggest thing, is educating yourself and trying to surround yourself with good people and try to find a mentor. I never had a mentor growing up and learning investing. And I wish I would have had one. I had to learn the hard way. It's a hard knock life. The first stock I ever bought, I've told this story before, went to zero. My rent back then was like $120 a month. I put over $2,000 in one name. It was a YOLO stock. It was a penny stock. This is back in the 90s, .com crash. And I lost everything in that account, which doesn't sound like a lot of money now. But back then it was a lot. I didn't have much more than that, So, the people that go on YouTube and they're like, I took $5,000 and turned into 5 million and I've never done anything wrong. They're full of BS. That's not how it works, guys. Like you need to either learn from somebody or learn the hard way. And even if I can teach you everything I know and you can go do my masterclass, but you're still probably going to need to learn the hard way before it really sinks in. And so consider it tuition, and if you make a mistake, every one of you listening probably has a stock that's red. I have stocks that are red in my portfolio. You're not going to be right every time. You don't have to be right every time. You just have to be right more than you're not. Peter Lynch, if he's right 6 out of 10 times, he considers that a success. So you're not going to be right every time. And if you're investing right now, you got to be thinking about 5 and 10 years out. You're not thinking about, hey, Eric, what's your top conviction stock for the next 6 months? That's a bad mindset to have, because in 6 months, it could be like earlier in the year when we had the taper tantrum and everybody sold growth stocks. That could easily happen again. So don't be thinking 6 months, be thinking 6 years. That's a hard question to answer, James, but a good question. I tried my best to answer it. Another one from James, for a middle-aged investor. So I'm assuming I guess I'm not gonna put an age on that. You can use your own interpretation of what you think middle-age is. Who's planning an early retirement, and there's currently an element of capital preservation there. What would be a sensible allocation between speculative growth stocks, mature growth stocks, and dividend-paying stocks? So if you watch the portfolio, how to build a growth portfolio video on the channel, if you have not subscribed to the channel, guys, please do. I'm going to hit this, subscribe and like. Is that working? There should be like, I got this Stream Deck. I don't know. It's kind of cool. I've like used it twice, but you should see like a subscribe and a thumbs up. So that's to remind you guys, but subscribe, hit the little bell to get notifications. You know, for a middle-aged investor, so there's a growth stock portfolio video on the channel. In fact, if you go to Fired Up Wealth, the intro video right now is that growth stock portfolio. That one is like an 8 out of 10. So risk score 8 out of 10, 10 out of 10 being the highest risk. Now that's subjective because what I think is 8 out of 10, my friends that are the same age think that I'm like a 20 out of 10. They think I'm nuts. Like, why are you buying CrowdStrike and Cloudflare and Snowflake? They're too expensive. It's my money. I'm going to invest with what I want. I believe in it. Maybe I'm wrong. I don't know. So far, I've made a hell of a lot of money, but we'll see how it pans out. But to answer your question, James, as you accumulate wealth and you get closer to that end game, and you say you want to do that financial independent, retire early with dividends, you would start to convert some of those profits into dividends, generally DGIF. But if you're, say you're middle age and you're still somewhere in the middle, you're not really ready to retire soon, but you're also wanting to preserve capital, I would scale that down to like a 6 out of 10. So, you know, it's really going to be up to you, but you could probably do something like a 40% dividend growth investing or DGIF. So dividend stocks, blue chips, you know, and then mix in some ETFs, mix in some cash and mix in growth and some spec. You know, your spec might go down to 5%, your growth stocks, maybe it's 25. You know, you really can play around with that number, but it would probably be something like that, you know, 40% in DGI, maybe 20% ETF, something like that. And then the rest in growth spec. And you might want to be more conservative than that. So you might want, you know, 25% ETFs and 50% dividend stocks and make 75% of it more of that blue chip. It's really going to depend on how conservative you want to be at that point in your life. And everybody's going to be a little different. And that's why the VIP, you know, we actually look at the portfolios and say, here's some ideas of what you could or couldn't do. All right. So next we're going to do top 18, but I have like 100 questions that I haven't answered over here. So let's see about, bear with me here. Let me try to catch up. So please talk about Telos. I just did a video on Telos. There's not really much to say. The earnings call was good. I recommend to go take a look at that video. So the video is going to be called the top 3 cybersecurity stocks to buy in August. And it breaks down Telos pretty well. Go take a look at that video. I think the earnings was good. It's not a hyper growth stock. I thought it was a buy under $27, the range being 20 to 27. It got down in that range and now it's over $30. It was a good call. It was spot on, but that's not a hyper growth stock. It's not going to give you 50% annual returns. It's more of it's like a value investor's play into cybersecurity is the best way I can put it. And the reason I say that, I have a broker friend, his company actually helped underwrite that IPO. And he's like one of the most conservative guys I know, and he invested in Telos. So that is not necessarily a hyper growth stock. And depending on what you're trying to buy, it might not necessarily be for you. So keep that in mind. But I like Telos, just understand what it is. Are you still bullish on Splunk and Fastly? I still own my house shares of Fastly. You know the story on Fastly. You know, I basically switched over to Cloudflare last summer. It was a great move. Splunk, I recently actually sold. It's not that I don't like Splunk necessarily. I needed cash. I'm no longer working and I'm still trying to invest. And so I don't have as much cash flow. It just happened to be one that I had a little less conviction than other stocks. And I really, you know, when I think of that space, I'd rather be in Datadog, and I've got a nice position in Datadog. So am I bullish on Splunk? Yes. Do I own it right now? No. Happy Friday, guys. What are your thoughts on Upstart and Docs? They're both, you know, really good. I'd put them in the spec bucket, but they've been really good. I mean, the numbers have been really impressive, especially at Upstart. That was a pick from Miguel in Fired Up Wealth, his top conviction pick for 2021. It was spot on. It's crushed it. It was one that I personally didn't invest in. I missed it, but it's been killing it. I think you have to be careful with the valuation, but from a long-term perspective, if they can keep that growth, I mean, it certainly seems impressive. So how's it going? Hey, Tommy. Tony B, howdy. Ruhal, happy Friday. Paul, Hawaiian shirt day. Yes, sir. Thoughts on Fastly? Just answered that. Have a great weekend. You too. Is this going to be recorded? Yes, sir. It's recorded. Hello. What do you think of FRSX? I'm sorry, I don't know that one. Can you please say something about genomics? We covered that. No bang. That's Rockstar. Did anyone win the challenge? They did not. Have you made more on real estate or in the market? That's a good question. I've made a lot more in the stock market, but when I was in my early 20s, that's how I really got my first kind of decent paycheck. I flipped a couple properties, and that's where I got the money to start. I actually had a bunch of rental properties when I was younger. I didn't like the tenant part of it, so I kind of moved it all to real estate. What I like, into the stock market. What I like about the stock market over real estate, the real estate's great. So if you're young and you can invest in real estate, especially if you can get approved, it's a lot harder now because it's harder to get those loans and prices are really expensive. Back in the day, people absolutely crushed it. It's a great way to build wealth. There's several YouTube channels on, people that, are younger than me that have actually just crushed it and made tons of wealth in real estate. So real estate can be very lucrative. The big thing about real estate, especially in today's era of real estate, is it's very hard to penetrate that as a solo individual investor. There's people that have very deep pockets, that have really good connections. It's kind of this incestuous industry. Everybody knows each other, and it's very hard to penetrate that. So if you don't know somebody that can kind of get you into that network or that pool, or if you don't have, if your parents didn't do it before you, that can kind of pass the ropes over. I'm not saying it's impossible, but it's very, very difficult. And for me, it was just wanting to do something that was simpler. I didn't have to deal with the tenants and the people. And for stocks, it's like I buy it, I sell it. It's all instant. I can do it from the beach in Hawaii. There's really no stress, no drama. And so as I got older, I shifted more into the stock market. But I've got nothing but love for real estate. It is a grind. It takes a lot of effort. It can be a great way to build wealth, especially at a young age. Hello, Eric. Welcome from Miami. Yeah, that's me. Appreciate the detailed response. You're welcome. Thank you for the question. That seems fair. Hi, Eric, listening from work. You guys are going to want to stay tuned because next we're going to go through the top 18 stocks. So bear with me. I don't want to miss any question because every question is important to me. Eric shared his thoughts a few months ago back. Okay, thanks, James. Love the ARK funds. Fired Up Wealth, 15 investing rules. Thank you, James. There's a link for the top 15 investing rules you can check out. There's a YouTube video that James posted. Any word on FRSX autonomous driving? I need to look into that one, guys. I'm sorry, I don't know it. Celsius, one of my top holdings. I like that one a lot. It's just crazy expensive, and it kind of goes back to that Beyond Meat. It's just, I don't know. I guess I shouldn't say I don't understand it because I drink energy drinks all day. So I tell you what, Celsius, they called that one in Discord. The group did, and a bunch of people bought it, and I didn't listen. I can't own every stock, guys, and I've got a lot of stocks that I bought, like Axcelis and stuff, that I was just looking at Axcelis. I bought that in Discord. If you're not in Discord, you don't even know what the heck that is. It's ACLS. Bought that in January. It's up 75%. It's an old semiconductor company. It's been around for a long time. Small cap. No one's ever even heard of it. Up 75% on that name. So there's just a lot of companies. It's hard to hit them all. Appreciate the content. Look forward to your videos every week. Thank you for that. Thanks for answering my questions. You're welcome. Can that be the next crowd? What's that? Can that be the next crowd? I'm not sure what you mean by that. They're both, the net is, Cloudflare is the Cloudflare and CrowdStrike is the CrowdStrike. And for me, I want to own both of those. If you want to understand what both of those companies do, check out that top 10 cloud stocks videos. They're very different. What do you think about Sofi's future? I mean, this isn't a reason to go buy the stock, but they're on the Rams and Chargers stadium, SoFi Stadium. I mean, that's going to get some exposure. To me, I think SoFi is going to be a winner, and that's why I own 1,000 shares. But the market doesn't seem to agree at this point. But I think that's just the sentiment of SPACs overall. I think it's going to pan out to be an opportunity for us later down the road if you're buying at 15 and under. That's just my opinion, and maybe I'm wrong. Do you think there will be a pullback on semiconductors? I'll be honest with you, and I know you're going to hate this answer, but we just had one. You use any trailing or otherwise stop? I do not. Question, I have done fairly well holding companies like Cloudflare, Datadog, Crowd. I'm afraid to add at this point. I'm afraid to add at this point too. They're expensive. I'm not adding at this point. You have to wait. You have to be disciplined. You might end up paying more 6 months from now than it is now, but you still, You can't chase when the moving averages are crazy high, when it's above trend lines. It never ends well. Statistically, it's a bad decision. Again, I'm not a financial advisor, so don't listen to me and don't make a decision off what I'm telling you. You could go buy it today and maybe it never goes down again and it doubles from here. I mean, who knows? It's just not how I do it. That's not a good discipline for me to follow. What I do has worked well for many years, and I just keep doing what works for me. You got to do what works for you. Not a fan of Beyond Meat or Oatly. It's tough to value those. Thanks for your question. Eric shed light on, okay, thanks James for doing that. Sentinel-1, what is responsible for the latest upsurge in price? Just FOMO and institutional buying. They don't necessarily understand the valuation sometimes. Thanks James for being on top of these questions. Wasn't covered on the lockdown. Thoughts on Alibaba? We covered that. If you missed anything, you just came here, you can watch the recording. So thanks for having this live, Eric. You're welcome. We've got more to come here. Listening while I run our branch. Nice, Aiden. Top 5 investing books. That's tough. So One Up on Wall Street, hands down, is my favorite. There's a few other ones that I like. I mean, it's tough because it depends on the person again, but I actually really like this book. Don't laugh. These guys, I really look up to these guys. I know they're on CNBC and some people might not like that, but John and Pete Najarian. Now this is more options trading, but the discipline part of it and understanding like Wall Street, like this book is really good. You can actually get it for free. If you watch those CNBC commercials, you can get it for free. I think it's a really good book, but I think One Up on Wall Street, there's a couple different books. I can post something later and give you, I've got a list of like 20 books. So it's ones that you've probably heard, nothing out of the ordinary. I like, Rich Dad, Poor Dad, even though I don't agree necessarily with what he talks about today, but he wrote that book back in like the 90s. And that was one of the first books I read that really inspired me to get into real estate and really inspired me into that financial independence lifestyle. So with Kiyosaki, Robert Kiyosaki, I do owe a lot to him, even though I don't necessarily agree with a lot of his views today. I like that book a lot. Good question, actually. I like that one. I have to leave. Will this video be available? Yes. Again, thank you, HTBoy41, for that super chat. That's pretty cool. I've never actually gotten one before. So you'll go down in history as the very first person to ever do one of those. What is it even called? A $4.99, whatever that is, super chat. That's cool. I didn't even know that existed. So thank you. Thanks for your super chat. Yes, sir. Greetings from Alaska. Hello. I love Alaska. I've actually never been to Alaska, but I love it anyway. What do you think about Sofi? We talked about it. I like it. What do you think about Palo Alto? It's a good company. I don't own it. It's a good company. It's in WCBR as a cybersecurity ETF. It's one that I brought to the Discord community. I didn't do a video on YouTube. I did bring WCLD. That's the Wisdom Tree Cloud Computing ETF back last year. It's up, 75% or something since that video. But they have another one. It's the Cousins Fund, and it's called WCBR, and that's the Wisdom Tree Cybersecurity. And that has stocks like CrowdStrike, Palo Alto, Zscaler, Cloudflare, et cetera. Is Fastly still a buy? It's tough, man. At these levels, it might not be terrible. It's one of those things where they kind of traded places. Fastly was trading at 120 and it shouldn't have been, and Cloudflare is at 35 and it shouldn't have been. And now they kind of swapped places. Like Cloudflare is it's pretty expensive, guys. It's one of the most expensive stocks I own, actually. And it's hard to buy it at these levels. So if you're going to buy one at these levels, if you really believed in the management of Fastly, you could call it a turnaround story. But I don't know if I have that conviction in the management, to be honest with you. So for me personally, I own some Fastly shares at like $20, house shares. I made like 600% on that stock, and I took profits and I put it into other stocks like Cloudflare. So it might be okay long term. I'd be careful with it. It hasn't proven itself. The earnings have been pretty bad, and so more than likely it could be a turnaround story. I just think there is some risk to that. That's my 2 cents. What do you think about rockets? That thing has been a disaster. I don't even know what to tell you about that one. To me, it doesn't make any sense. I honestly do not understand rocket companies and why it trades the way it does. I wish I had a better answer, but I don't think anybody has a real. I think I could make something up and and tell you a response, but I don't think anybody I know or anybody on TV or anywhere else has any idea why that stock behaves the way it does. I certainly don't. If you have a better answer, let me know. I don't know. What do you think about Arrival? I don't know. Snapchat stock is the Amazon of his generation. Hi, David. What did I miss? How about fun? How about FUW stocks? Not sure what you're asking. I started following your high growth portfolio models. I hold SCHD and VNQ. Should I reallocate those funds? I can't tell you that, man. It depends. It depends on the person, your goals, all those different things. So there's nothing wrong with those funds. I can't tell you if it's right for you or not. I don't know enough about you. I'm sorry. DigitalOcean's interesting. You could talk to Tony C. He's in Discord. He's the first patron ever. I think he might own that one. We just had a conversation in Discord about DigitalOcean. The problem I have with DigitalOcean is I'm not sure about the moat. I just don't see how, if Amazon or somebody, one of the big guys, they talk about like their customer service and doing things niche. I don't know. It's a small company. I'm just not sure about the moat. It's either going to crush it and make you a bunch of money, or it's going to lose you money. That's what I call spec. If you like it as a spec, throw it in the spec bucket. And if you don't know how to play specs, there's videos on the channel, but there's a right way and a wrong way to play specs. Target expensive, Disney good. Both good companies. Which stock are you most bullish on? There's a lot of them. You can check out the top 25 high conviction on Patreon. That's probably paint the best picture of what I'm excited about. I mean, I'm never one of those guys that's just like, I'm going to put everything on one horse or one stock. I've never been that way. I own 97 different stocks. It's very hedged. Part of that's that whole capital preservation model. Modern portfolio theory, MPT, if you're not familiar with that. I believe in that model. Some don't. You might be a person that says you can't outperform unless you have 5 stocks. That's fine, man. Do what works for you. Like, I just do what works for me. I've got nothing has a super high concentration in the portfolio. So there isn't one stock where I'm going to put all my chips in that one stock. It's just not how I operate. And I can't at this point in my career, my life, I can't do that. I got to preserve the money I've worked, 20 years to make. You know what I mean? I'm losing my voice. SE a buy now. I mean, you can look back in 10 years, it probably looked like a buy, but it was a better buy in Discord when we bought it 100% less. It's hard to chase some of these stocks right here. Do you think HPQ falls? I don't know that one. Sorry. God, what am I missing, guys? I think that's it for the questions. I'm going to go in the top 18. So what I'd like you guys to do is anybody out there that asked a question that I missed. If I did, or James, if you know of one, post it now. I'm at the end of the chat screen. So if I missed something, let me know. Can you post a link to that top 25 stock list? It's on Patreon. You can go to Google, just type in Fired Up Wealth Patreon. You guys ready for top 18? You guys need a bathroom break or something like that? Or should I just keep pushing on? It's interesting. I just saw as I typed on that screen, I got lag. So if you got lag, that was my fault. I won't type anymore. So anybody there? You guys still with me? Somebody type something. You guys still with me? End of chat. I'm going to go into the top 18. Okay. EV stocks, Proterra. That's one that the group likes a lot. I think that it has a good speculative story. I think Lucid also has a good speculative story. I think it's hard to put a valuation on them. You have to really have conviction in the management and the company. They would go in the spec basket. And I'll be honest with you, EV is another realm that I just don't have experience in. I'm very bullish on Tesla. I'm actually going to be doing a video next week on Tesla. It's going to be pretty cool. Well, I shouldn't say that. gonna back up, and I can't edit it out because it's live. I might do a video on Tesla next week, and if I do a video on Tesla next week, it's going to be epic. We are here. Well, let's go. So let's go. Like, I'm in a hurry. Okay. Well, hey, man, I'm just hanging out. I got nowhere to be. It's my wife's birthday, actually. I need to get going. So top 18. Before I do that, guys, this is the portfolio balance. Now, this is just the taxable brokerage as of today. It was a little bit before closing, so it might be a little bit different. I think it's probably a little bit less because I think we had a little bit of selling before the closing bell, and I posted this a little bit before that. So yeah, CRISPR kind of falls back into that genomics play. I like the company. The way I have to play genomics is this ARKK. I'm not an expert in the space, and that's just my my honest answer. So I'm just under 1.7 million. This is one of my accounts. This is the taxable brokerage. So it doesn't include the retirement. I've got a bunch of retirement accounts and stuff like that in there. So I'm doing all right. This is all taxable brokerage. So not retirement. I started when I was, 19, 20 years old, $50 a month is all I had, and just grew it over time. Most of this, guys, is actually a big chunk of this is profits. Now, some of it's actual profits. So if I went and sold this today, I'd have a huge tax burden. But it's also, there's a lot of hidden profits because I sold a bunch of profits on growth stocks and I bought things like AbbVie. I bought AbbVie at like $65. Well, AbbVie is one of my top holdings that we're going to go through on the top 18. But the thing is I didn't pay. I paid money for it, but it was profits. So I took profits to buy AbbVie because at the time it was paying me a 6.5% dividend. So now my yield on cost on AbbVie is 6.5%, and the stock is almost doubled since I bought it. NetApp's another one that did that. Did a video on NetApp on the channel last year. It was paying 4.5% dividend yield. The stock is up over 100%. And somebody asked me the other day to talk about NetApp. NetApp's one of those stocks that, just nobody really talks about. Nobody knows a lot about. I have a couple of friends that work there. The only thing I know is that those guys that work there, they're top sales guys, and they wouldn't be working at NetApp if it weren't a good company. And so as soon as I knew they were going there, I bought some stock. It was, down from the sell-off last year, and it's done really well. But the cool thing about a dividend stock is if you can buy it on sale, like an AbbVie when it was at 65 or a NetApp at whatever the heck it was at, 100% less than it is now, that yield on cost. So like Microsoft, I have a lot of Microsoft, but I didn't pay that much for it because I bought it in 2013. But my yield on cost on Microsoft, I'm making basically 6.5% dividend yield off my cost basis on Microsoft, even though the yield's like less than 1%. And that's the power of compounding, that eighth wonder of the world. And, as a young investor, you say, well, I just want growth. Growth is good, but having some of that DGIF, guys, can be super powerful if you can find the right companies like those Microsofts that turn into behemoths later, because you're getting this crazy yield on cost that's like, it's untouchable. Like there's no reason for me to ever sell that stock unless the company, unless the story changes, the management starts doing a bad job or what have you. So, ask about CRISPR again. I like the company, but I personally play that space through ARKK. I'm still getting questions. We're kind of past questions. So let me go back. There must be some lag here. Let me finish these questions, and then we're going to go on the top 18. So last call for questions. Last call for questions. It's a good thing you're asking questions, I guess. So would you buy into semiconductor ETFs these levels? Probably not, because I was buying everything when it was lower. That's how I do it. Will it be worth a lot more in 5 years? Yeah. And this is the problem we have. This is the conversation we have a lot in Discord. Should I buy Apple at all-time highs? Well, it'll be worth more in 5 years, but I'd rather have bought it, in July when it was literally, 10, 15% less. So you have to make that decision on your own. I personally would rather have a stock run 30% and have it drop 15% and pay 15% more 6 months from now than chase it on the way up. That's just me. Again, it doesn't mean that I'm right. It's just what I do. You want me to answer a question, you ask a question, I give you an answer. I'm being 100% transparent. Thoughts on PBW, it's a buy. I think it's undervalued. I don't know that space very well, which is why I play PBW as well. And it's very diverse because it has solar, it has electric cars, blah, 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 hydrogen. Are you including ETFs in the top holdings? Yeah, it's the top 18 holdings, regardless of what it is. In the taxable brokerage. So I'm doing the top 18 just in the taxable brokerage, not retirement. I've also got restaurants. I'm not including any of that. I'm not including real estate. This is just top 18 stocks in this one taxable brokerage, which is 1.6 million, whatever. SpaceX, OTC market, beasting, GM. Man, we're getting more questions. I'm listening. Do you have any thoughts on, we've answered that one already. So is Nvidia a sell? I think it's a hold for a long time. Any thoughts on Wix? Seems decent. I don't own it. How do you fight FOMO? Psychology. Masterclass teaches a whole hour on psychology and how to deal with FOMO. It's not a question I can answer in 30 seconds or anything. So I apologize. That's awesome. I'm expecting Tesla video now. Now I'm not going to do it just because you said that. Actually, just because it's you, I might do it because clowning around, I can post a video any time of day. It doesn't matter what day it is. And that dude, I'm assuming it's a dude, literally will say, thanks for the content, like 5 minutes later. And I know a lot of you don't realize the importance of comments and likes and stuff, but literally is the difference of me making another video and like wanting to put extra effort into the editing and just not caring. There's like this week's been a rough week. I got low views on all the videos, and it's like, I considered canceling this live stream. I'm like, well, no one has time. They don't want to watch videos. And it's hard as a creator because it's kind of like a video game. You always want to like up the ante and YouTube gives you these great metrics. So like you release Salesforce and it's like, oh, your views are down 30% on this. This topic's boring and no one cares. And it's like, what could I have done different in CRM? CRM is like what Microsoft was in 2013. Everybody's going to want to buy CRM in 5 years, but nobody wants to buy it when it's $220. That's just how it works, though. That's just it goes back to that whole FOMO thing. That's just how the markets work. And it's not just us as retail investors. Institutions do the same stuff. So I'm bullish on Nvidia. James, you're like the man. I appreciate you moderating this. Where are you going for dinner with your wifey? I took her to a dive bar for an $8 burger for lunch. I love your content. And what's funny about that? You guys judge me for it. That's where she wanted to go. That's what she's simple and I love her for that. So if she wanted to go to a lobster dinner, I would have taken her to lobster dinner. She wanted to go to the dive bar for the $5 or $8 cheeseburger and $2.50 drinks is what we had for lunch. So where are you going for dinner? I love your content. I appreciate you. Now going to comment on every video. You should comment and like every video and watch the video the whole, even if I have to be careful what I say, but watching the video through the whole duration helps me a lot more than anything else. So keep that in mind. And sometimes you don't have to always be completely engaged to watch the whole video, if that makes sense. All right, let's go before you guys get bored. So bear with me because I think this is important. And I've had people say, why don't you just do this on YouTube for free, blah, 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 blah. I make a few $100 a month on YouTube doing ads, and I'm financially independent, and I spend a lot of time researching these stocks. But to give you something like this, like my top 29 high conviction with actual safety score ranks, growth score ranks, moat score, management, what I think about each stock, why I like it, the trend, the bucket. I mean, this is like the secret sauce, and it's $10 to get that video. Now, if you don't have $10, and if you don't want to do it, I don't care. But the people that are actually judging me on my on comments and stuff saying you shouldn't charge for that, if you're a serious investor, $10 is not that much money. So if you don't have $10, I don't know what to tell you, but $10, you can go watch this 30-minute video. It's worth every cent. And I do free stuff all the time on YouTube. Every video I do, I put hours of time into these videos, not just creating the videos, but researching the video, editing the video. I'll spend 3 hours editing a 10-minute video to make it 1 minute shorter. And then the watch time's 3 minutes or 4 minutes. And you're like, how do I get people to watch the whole video? So this video is on Patreon. You don't have to go watch it, but if you want it, that's where it's at. And that's how it's going to be. So hopefully that's helpful, but check it out. It has my top 29 stocks. Some of the stocks I'm covering today are in this, but it's actually not every stock I'm covering in the top 18 is actually in the top 25, which I know sounds counterintuitive, but I've got my own reasons for that as well. Okay, so first of all, YouTube, if you haven't subscribed, please subscribe, hit the subscribe button, click the bell to get notifications, give me a like, drop me a comment. Facebook, we've got a Facebook page. We have a Facebook private community. You can apply to the private community. It doesn't cost anything. That group's not that active anymore, but I'd be happy to have you in there. And I wish that it was more active. It's just everybody's in Discord now. So join Facebook, start adding some value to Facebook and be a hero. Twitter, that's probably the second place I'm at when I'm not in Discord. I'm in Twitter. That's a free way to get a lot of great updates on earnings calls and things like that. I still don't have 1,000 followers on Twitter. I don't know what to do, but hey, if you have a Twitter account, go to @FiredUpWealth and click the follow button. Easy to do, right? Instagram, I'm apparently too old to be cool on Instagram because I'm past 40, so nobody wants to follow me on Instagram. That's fine. And then TikTok, it's even worse than Instagram. But I at least try. I respect all age demographics. I want to help everybody, and I'm on all platforms. @FiredUpWealth on every platform. Go follow, like, subscribe, yada, 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 kumbaya. Are you ready? You already are. I won't bore you anymore. Okay. So first stock, Amazon. Now, if you're 20 years old, I'm not saying that you should go buy Amazon necessarily, but if you've been watching this video, if you haven't watched it, go back, watch the recording. I talk about capital preservation. Amazon is a stock that I feel very comfortable sleeping well at night, knowing that I can put my money in this stock and that it's going to be worth more in 5 or 10 years, and I'm not going to lose all my money in Amazon. It's not going to be a hyper growth stock. That's not why it's there. It doesn't pay a dividend. It's not why it's there. I believe in their moat. I believe in their management. I think they're doing exciting things. People ask me all the time, though, why do you like Amazon? I don't even like, buying stuff from Amazon. I don't have Amazon for the retail part of it. That's just icing on the cake. It's because of Amazon Web Services. They're the largest cloud provider. I'm a cloud SaaS guy. I have to have Amazon. They are literally number one and have been for year after year in several different areas in cloud, okay? So you'll notice a trend here because I've got Microsoft, I've got Amazon, I've got Google. The reason I have those primarily are for their cloud services, okay? Number 2, Invesco QQQ. That is my second holding in my taxable brokerage, this 1.65, whatever the heck it is, $1 million portfolio. Invesco QQQ. So more Amazon, more FANG, more, large mega cap tech. You say, well, there's no gas left in the tank. Maybe. But the nice thing about QQQ is it has other stuff in there too. I mean, Tesla's in there. CrowdStrike just got entered in the QQQ. It's the top 100 by market cap that are NASDAQ listed, okay? So that constantly changes all the time. As companies grow, they get entered in, companies get moved out. So it's not an actively managed index, but it kind of does some of that heavy lifting for you. If you own it for 20 years, quality stocks are moving in and less quality are moving out. So it kind of does some of that management for you, that heavy lifting for you. It's just not actively managed. That's my number 2. Number 3 is Microsoft. Now, all of these positions have grown into themselves. And what I mean by that, when I was investing in these companies, I didn't have $1 million portfolio. So I might have had a few $100,000 portfolio, and I'm putting like $10,000 or $15,000 in these stocks, which is a lot of money back then. Well, now $15,000 is less than 1% of the portfolio. So these things might have grown from 10,000 to 60,000, like Microsoft being a 500 or 600% gainer. So they've really grown into this position. The cool thing about Microsoft is, like I said earlier, I've got like a 6% yield on cost. I bought it back in 2013 at like $30 a share or something. And so it's one of those that's just like, there's no reason to sell it. There's no reason to add more. And it's got a great cost basis, and it was a good call, and it grew into this large position, and I feel comfortable having my money in there. It pays me a little dividend. It's kind of a, blue chip kind of safety stock of the future type company. So that $10 thing, man, like you can spend $10 on I used to play a game called War Dragons. Have you guys ever played any like these mobile apps? And I'm not even sure if I should say this on a live recording or not, but I'm going to do it anyway because you guys have been great. I had a good turnout. I feel pretty good about the turnout today. So I actually played a War Dragons game, and at one point, this was years ago, I had about $1,500 into this mobile app, and I'm not proud of that. But the cool thing about it, being the investor I am, is I sold the account for $2,500. so I made $1,000 on it anyway. But yeah, not sure where I was going with that. You said something about $10. So people spend $100 in a weekend to buy whatever gold or to buy whatever on these games, and don't think twice about it. But to spend $10 to get some knowledge that might help you, have more money in your bank account when you're older, like people are less. They're more apprehensive of that. And I get it. The internet's filled with scam artists and people that just aren't qualified to really even be sharing information with you. And, I'm just a dude on the internet too, but I have been doing this for 20 years. I'm very transparent. I've got a really good following of people that know who I am and what I'm about. I've been very transparent with them. They know everything really about me. Like, I don't hide anything. So, I feel like I'm well qualified to talk on here. The Motley Fool, agreed with me and hired me on as a contractor. So, I mean, not every channel is going to be, I'm not trying to sound cocky or anything like that, but just be careful who you listen to. That's all I'm going to tell you. So, Nvidia would round number 4. No one's surprised there. I think my cost basis is quite a bit less. This one's kind of grown into it as well. I started buying it in 2018. Before the split, it was like 130. So I don't know. I think $50 or something a share is where I'm at in Nvidia, or $40. I don't remember, but this technically pays a dividend, but it's a small dividend. That's my number 4. Google, it's Alphabet, but the ticker is, I own A shares, GOOGL is number 5. That one's kind of grown into the position as well. I've had it for a while. I mostly own it for Google Cloud Platform. But YouTube is, it's like its own universe economy. So you're literally on YouTube right now. YouTube's making a lot more money off of what I'm doing on YouTube than I'm making. They've got a huge monopoly on this, and between their cloud services, Waymo, their search engine, there's just a lot going on at Google. It's basically these mega cap tech stocks, guys. They're conglomerates. They're modern day technology conglomerates that have their hands in every damn pot you can think of. And they're not hyper growth. They have high, this is going to be the next $2 trillion company. It's just under $2 trillion. And it's not about the growth at this stage. I invested them. So picture like me being you guys, 5-10 years ago. That's when I was buying these kind of stocks. Okay. These were the growth stocks of my time, my generation. If you're 10 years younger than me, and they've grown into these valuations, but now they've kind of converted more into that mature growth, and they're stocks I feel safe having my money in. Plus my cost basis is so low. On Google, you could lose 50% of its value and I'd still not be in the red. It's like, it's a lot easier to sleep at night knowing that. You of course don't want to lose 50% of your portfolio or of your stock position. But if you do, it feels a lot better when it's, unrealized gains you're losing versus actual hard-earned money. If you have $5,000 of your hard-earned money that you saved months to get, and it goes down 50%, you just lost $2,500, and that's a really big deal, and it's a lot different. Thank you. I appreciate that. Okay, cool. Let's keep going. Cloudflare. This grew into its valuation. It was a buy. I bought this I bought it in the IPO in 2019. I don't remember the exact price, but it was in the $20. It was a Discord buy at like 42. It dropped to 35. People were freaking out. It went to 33. Like, buy more. And now, you could have bought it at 50 and it still would have been a deal. And I was telling people when it was like 65, I'm like, I think it's pretty expensive here. And it doubled from there. So like, I'm generally pretty conservative when I'm loading up and buying these kind of stocks. I'm not right every time, but this was a really good call, and it's grown into a nice valuation or a nice position in the portfolio. AbbVie, this is like house shares. I use profits to buy it. I told the story earlier. I got about a 6.5% yield on costs, and this is just great income, and it's a high quality company. Lam Research, I've owned this one since like 2016. Semiconductor equipment, pays about a 1% dividend yield. It's in that DGIF, dividend growth investing for F.I.R.E.D bucket. It's got a nice total growth, so stock growth plus dividend growth. I think it's going higher, guys. It's a good quality company. There's a lot of great semiconductor stocks. Some of you like ASML, and there's a lot of, CLAC. There's a lot of semiconductor names that are equipment based. This is just my horse in the race, and I bought it a lot lower, and there's just no reason to sell it. Again, it's like a 3% yield on cost on a growth type stock, a moderate growth stock, I'll call it, because it's, you can't put this in the same bucket as CrowdStrike or something, but it's got solid growth. It's more of that mature type growth and pays a nice dividend. Generally, anything that pays a dividend, guys, is somewhat mature, just different levels of maturity. Wingstop is a different level of maturity than an AbbVie, right? Square, bought it in 2017, made a ton on that one. All these stocks grew in their position, guys. And this is what you want to do. You buy them early, you find winners, you hold them long term, and they grow into these big, positions in your portfolio. So and it's like, you look at it, it's like, well, should I trim some of this? It's like, just let it run. For the most part, unless the story changes, I'm not going to go shave like 10% of my Square. There's just no reason. I think it's going to go higher, right, over time. Snowflake, probably not surprised to see that. Some people might be surprised to see that it's as high as it is now. It's made a nice, 30, 40% pop since I bought it. This was a Discord buy. We were very patient. We started buying around 225. I said it was going to go below 200. We targeted, 165 to 190. It got to that 185. I didn't even hit the bottom. I bought it like in the 190s. I missed the bottom on it, but it was still a good buy up, nicely on it now. CrowdStrike, you guys are probably happy to see that. A couple of years ago, I was focused on this whole dividend thing because I needed that income, right, for that early retirement, that financial independence. And what I've done because of, great support from you guys with Patreon and things like that is now I'm financially independent, but I'm not truly retired because this is my job. And so instead of using those dividends, I've converted a lot of that dividend, income into these growth stocks that I really have a lot of conviction in. And CrowdStrike is a top holding. I'm going to need a drink for this one. You're going to want to stay tuned for this one. Okay. All right. So this is one that the group found this one. They bought it lower than I did, and hats off to them. It made a great run. You could have sold it for great profit. Most of those guys, like Dave and Aiden, you guys are still nicely green on it. So that's the key, right? To get in early, because if you get in early and a stock has this huge sell-off, you don't really sweat much. You're like, I'm still up 20%, whatever. It's going to go higher. If you buy it and it's, much higher than a lot of those other guys bought it last year, and it starts to go down, then you see that red in the screen, and that's where that psychology comes in. And even someone that's been doing it that can teach you guys psychology. This is one where I did not think it was going to go as low as it did. I said it would probably hold like 32 and then 31 and then 30. The thing went to like $28 and change. And so I'm buying this thing too early. I'm buying it as it goes down. And I have 1,000 shares in Grow Generation, and I'm down 10% on it. But I'm not really that worried about it. Now, this is a long-term hold. 50% of it I plan on holding for several years. When it gets back to about $50 a share, which I'm hoping won't take more than a year, I'm going to sell half of it. So half of this position's long, half of this position's basically a swing trade. I think even now it's trading at $31. Maybe I'm missing something. Maybe this thing's just a big fraud, and this is one that I'm calling wrong. But if that's the case, there's a whole lot of smart people in our community that feel the same way about it. So if we're all wrong, we're all wrong. But I think this one probably finds its footing and goes higher. But it is spec. There is a chance that it's wrong. So hear me say that. But it is one of my top holdings, and I do have quite a bit of capital put into those 1,000 shares. Salesforce, it grew into this valuation I've had a while. Trade Desk, started buying in 2019. It's made a huge run. It grew into the valuation. A lot of these stocks I was buying, $5,000, $10,000, $15,000 positions at one point, and they just grew into a bigger position. So if I've got like $75,000 in a stock, like I didn't put 75 grand into it. I probably put, 25 into it, and it grew. And that's what you guys are trying to do. And that's why, I'm trying to teach what's worked for me. And I'm hoping that you guys can repeat that same success in your own portfolio, so that when you're my age or whatever, and you're in this stage, you've got these positions that have grown into these nice valuations. Because I'll tell you what, guys, every one of these stocks at one point, now Grow Generation is the only one on this list that's not nicely green. Every one of these stocks at one point, I got hammered on them, especially if they're growth stocks, even Amazon. There was times where it's like, you're looking at it and you're like, it's, March of 2020, and you're like, I just lost 3 years of gains in a week. And if you don't have that discipline and that mentality to say, the market's crazy, it's fine, it's going to come back, you're going to panic and probably sell. And the portfolio literally is $1 million higher today than it was in March 2020 without putting really much money into it at all. It's all from gains from the bottom to the top. So imagine if you panic sold for $600 and some $1,000 of your assets, and now it's like $1.7 million. Like, that's what happens to a lot of people. And then they blame it on everybody else. They blame it on the stock market and Wall Street and the suits. A lot of it comes down to just buying the right companies, having conviction. And that's why that top 29, that top 25 high conviction stocks, their stocks, if they lose 40% like they did earlier in 2020 or 2021, earlier this year, some of these stocks, guys, even Trade Desk, this thing was, before the split, it was down down 50% from its highs. Snowflake, all these stocks got hammered. And every one of these stocks I've owned where they're a lot higher and they get cut by 30, 40, 50%. Growth stocks run hard and they sell off hard, and that's what they're going to do. And if you own these in your portfolio and you don't have that expectation, you're in for a lot of pain. Okay? If you hear me say that. Because if you own these stocks, these hyper growth stocks, they are not going to go up every day in a straight line. At some point, they're going to lose 30% again. Now they might run 50% before they drop 30. And that's what you want to do. You want to get in before those big runs. Because like a Cloudflare, guys, with the cost basis at $30 or whatever it's at, what is my cost basis on it? I'll tell you what it is. I got it over here. Cloudflare net. Okay. So what do you think my cost basis is on that? Okay. $32.77. I got 350 shares of Cloudflare at $32.77. Obviously I bought in lots of different lots to fill that total cost basis. It's up $32,000. It's up 300%, 277%. So that thing could literally lose 30% of its value tomorrow. And it's like, okay, you're still up 270%. Now it's not a fun thing to lose, if you've got a $1.7 million portfolio and the market tanks 5%, growth stocks tank 10%, you can lose $160,000 in a day. March 2020, before that whole correction, I had about, I don't remember, 900, it was $1 million in this account. Now I've got other accounts. So this is just this one account. I've actually got another taxable brokerage and retirement, whatever. I just focused on this one Fidelity account. That thing was like just under $1 million, and it lost 40%. It lost $400,000 in like 6 weeks. Most people would be like, having a heart attack. And I was in Facebook. Anybody that's been around can tell you can go on Facebook and search. I'm like, it might go lower, but this is an opportunity to accumulate shares. Like, there's no way that Microsoft should sell for less than $150 a share, And that's where it's really important having that due diligence to really understand what you own, and then having the conviction that it's going to be worth a lot more money in 5 years. But you're going to have pain along the way. It's not going to be, I'm just going to buy a stock and it's going to go up every day and I'm going to be rich and have a Lambo. It's not how it works, guys. And if that's how you think how it's going to work, you're going to be disappointed, because it just doesn't work that way. The next one is the SOX, SOXX, iShares Semiconductor ETF. Okay. So I've already had the QQQ. Now I've got the SOX. A lot of people prefer SMH. I prefer SOX. It's just the makeup. You can look at the holdings and decide which one you like better. Unity. A lot of people probably happy to see Unity on this list. This was a dollar cost average war. Again, very similar to Grow Generation, where I bought it early and was down significantly at one point. I think I was down 15% of my position, and now it's up, 16, 17%. So it's not up a lot, but I've got a decent position on it. I didn't do a great job. I've got a couple hundred shares of Unity. It's sitting pretty decent. I could have done a lot better, but dollar cost averaging still worked, even though it wasn't perfect, So not going to be perfect every time, and not afraid to admit that either. So those are the top 18. Now, I have about 97 different holdings. The majority of the stocks we just covered are in this top 25 high conviction, and there's actually 29 stocks covered in here, okay? But what that does, there's a video on Patreon that is going to give you, it's going to go through all of these stocks, these 29 stocks, and it's going to say, okay, the first one, so the very top one, cybersecurity cloud. That one's, I'll give you one for free. It's CrowdStrike. Safety score is only a 7 because of valuation and competition. The growth is a 9. The moat's a 7, kind of the same deal. There's competition with Sentinel-1 and others. The management, though, is a 9. And so that's how I measure it. And I measure every stock that way. Like, okay, the growth's a 9, the management's 9, so I have high conviction in it. But the moat isn't perfect. It has a decent moat for endpoint security, but there's plenty of other people that do it. And then the safety score, well, it's pretty expensive. It trades at a pretty high multiple, and it goes back again to that moat relating to that safety score. And that's how I do it for every single stock. And I'll say like, okay, I don't own this stock. I don't own Amazon for growth necessarily. I own it mostly for its management, its moat and its overall safety score. And that's what I do is I go through each one of those stocks. It shows you the bucket, the trend, and I talk about each stock and why I like it. Kind of like I just did, but a different twist and much more entertaining video because it's on Vimeo, so I can do a lot more on those videos when they're not public on YouTube. So that is kind of it for now. What I'm going to do, I'm going to answer any last questions. I've been on for an hour and 40 minutes. So let me just see here. So yeah, you might not agree with that list. And again, that might not be best for you, right? Because you might be in hyper growth mode and you're like, well, I don't want AbbVie. Hell no. I wouldn't invest in AbbVie either if I were 20 years old. But I bought that with profits, and it's literally income. So that is a passive income investment for me in a high quality business that I bought with free shares, or basically free money house shares. I had to pay taxes on it, but it was profits from other growth stocks. In fact, I want to say some of my Chinese tech stocks helped pay for AbbVie when I did that. So what else? Did I miss anything important, guys? If there's anything important while I'm wrapping up, just let me know. There's a lot of chatter, and I really appreciate all the comments. We've had a lot of people kind of come and go. I appreciate the people that hit the like button. So there's 60 likes on this video right now. If you're in here and you haven't hit it, hit the like button. Drop me a comment. When this is all over, you should be able to come back in and watch again, drop a comment. Message retracted. Go ahead. You can tell us, Damien. What's up, buddy? What'd you retract? We're all friends here. Apps, I like the company. Actually, I bought some at 55 at one point. It's a spec, it's spec. It's one of those exciting companies that it's fun to invest in those because there's a lot of upside potential. And I think that it could be a big winner. It could also, it could also not be a winner. It would be more of a spec. It's either the nice thing about spec here, this is important. I'm going to finish up with this. If you have $1,000 and you invest by buying the stock, so not options, not YOLO options, anything like that. You buy shares of a stock with $1,000. The most that you can lose is $1,000. But that $1,000 in the right stock is infinite. The amount of returns you could get is literally infinite. That $1,000 could be worth $100,000 if you bought the right stock and held it long enough. If you play that game long enough and you put a little effort into the due diligence and you buy more than one stock and you buy a basket of stocks and hedge your risk, it's a pretty hard game to lose. If Peter Lynch goes back to that 6 of 10, if you got 6 stocks that are bagger stocks and you got 4 of them that are dogs, you're still going to crush the market and make a lot of money. But people hear that and they say, well, that's not as easy as it sounds. It's not easy. But if you put some work into the due diligence and you really understand the company and have conviction in their management that are going to get it done, you can do it. You can bat at 60% or higher. Anybody listening to this, you can do that. You can easily do that. And sometimes the best investors are people like us that just use the products every day. And this is something, if you have not read Peter Lynch, One Up on Wall Street, I think it'll change your life. Go read that book, because a lot of my core, a lot of the stuff I talk about, a lot of the stuff I really believe in, when I start getting worked up and start talking about this stuff, it goes back to Peter Lynch and his methodology. And I think it'd be a really good read for you, because that's what he was all about. Like, if I can win 6 out of 10 times, I'm not going to be right every time. I'm not going to pretend to be somebody that I'm not. I'm not going to pretend to turn $5 into $5 million and all that. There's a lot of flashy lights and Lambos and all that stuff on YouTube and social media. You have to be careful with that, guys. Like, this game's not that hard to play. You just have to understand the rules of the game and understand that it's not a get-rich-quick scheme. It's investing in quality companies and holding them for a period of time. All those stocks I just showed you, all that money, the majority of that money is literally from doing nothing, just buying it and holding on to it through ups and downs and going, it's fine. We roller coaster up and down. It's cool. I like the management. I like the company. I like the product. It's going to be worth more later. It sucks that it's down right now, but whatever. If you can do that and you can have that psychology and you do a little research and pick the stocks that you think are going to be winners, you're going to be right more than you're not, and you're going to make a lot of money. But you just have to be careful about chasing stuff, buying stuff that doesn't have true, some people would say Snowflake doesn't have any credibility. There's no way you can warrant paying that much for the stock. Now, I can see that because the core that I am really is a value investor, even though that sounds ridiculous. The difference is I understand how to value a SaaS stock, and I know how those stocks can grow into their valuation. So I'm not saying I'm right every time, but when you look at like Salesforce, nobody wants to talk about Salesforce, right? They IPO'd in 2004. If you would have bought Salesforce CRM in 2004, it's up over 6,500%. It's one of the highest grossing SaaS. It probably is, actually. I think it's number one, but I don't want to say that for sure because I'd have to double check. I think it's the number one SaaS, at least for well-known names. And you say, well, yeah, but that's a different time. CrowdStrike and Snowflake can't do that, and Cloudflare can't do that because, Datadog can't do that because it's a different time. There's more competition. I mean, Salesforce, when they came out with CRM, Benioff left Oracle. I used to sell, Siebel. So Siebel now is C3 AI, which is why I won't buy the stock, by the way. So I used to sell the old Siebel product. And, you think of that whole, so Siebel with analytics and then with the CRM space. But we used to use that old product, and Benioff basically left Oracle and said, hey, we're gonna take this and we're gonna make it SaaS, we're gonna make it cloud. And Ellison, the CEO of Oracle back then, was like, cloud's a joke and didn't believe in cloud at that time. And Benioff had that vision, but there were plenty of other people that competed in that space, and there still is. There's a lot of people that do CRM software, but Salesforce really has a moat. They're best of breed at what they do, and they're the number one customer relationship management software tool, 8 years consecutively. And I'm not saying every stock is going to be worth 6,500% more, but you can look at some of those stocks that were really expensive. Salesforce has always been expensive too, and it just kept growing in its valuation. So you look at Snowflake 10 years from now, it can easily be worth a lot more than it is now. I hate to put a valuation on it, but if that's not $1,000 stock in 10 years, I'd be really surprised, and probably a lot more than that because they'll do stock splits. But I can't guarantee that, and so I don't have my entire life savings in one of those stocks. I buy a bunch of them. I only need a couple of those stocks to do. It doesn't have to be 6,500%. It could be just a 10 bagger. Put $10,000 in a stock, it turns into $100,000. Put $10,000 stock and it turns into $5,000, and I sell it for a $5,000 loss. And I sell the other one for $100,000 profit or whatever, $90,000 profit, and I'm still way ahead, right? And that's why I also like doing individual stocks in the taxable brokerage, because I can tax loss harvest infinitely. In other words, offset my gains and losses. So if I pick a loser and I'm down $10,000, I can trim another stock that's up $10,000 and pay no tax ramifications and basically get my cash and try again. I mean, it's awesome. Like it's so fun to even talk about it. Like it's literally a game that can make you wealthy, and it's not really that complicated to lose. You just have to understand like how to play the game and how to hedge it. And maybe I'm oversimplifying it, but that's really how I feel, guys. And if you don't agree with me, that's totally cool. But I feel like with a little bit of homework, now I say a little bit of homework, I put 40, 50, 60 hours a week into stocks. I'm a complete stockaholic. It's all I do. I'm literally in my, 3 a.m. last night, I'm in front of my computer right here and I'm doing due diligence on a stock that I want to do a video on next week. That's just how I'm wired. And the reason I say that though is that I'm here. I said this earlier too. A lot of these videos don't get likes and they don't get respect. If I put like 15 hours in a video and it's 15 minutes long. So between shooting the video, the due diligence, the creation, the editing, it takes me 15 hours. And I make a video that's 15 minutes long. I just saved you 14 hours and 45 minutes. And say you cut out the video part of it. So maybe it's just, maybe it's only 8 hours of due diligence. I just saved you 7 hours and 45 minutes. Now, just because I do a video on a stock doesn't mean you should go buy it. But what it does is it saves you some time. It's giving you information and facts and stats that you can go cross-reference and verify for your own, that you don't have to dig up from every edge of the internet. Like I look at everything from S1s to company filings. 10Ks, 10Qs. I'll literally have 100 tabs up, guys. I'm not even exaggerating. If I'm doing due diligence on a stock, I'll have 100 different tabs up. I've got 250, gigabytes of RAM, whatever. I maxed this computer out so that I can have as many tabs as I want to open. And I've got stuff open all day long, but I'll have up 20, 30, 50, 100 tabs. I'm not even kidding you. And, different articles from whatever, Seeking Alpha, from Wall Street Journal, from Barron's, like everything I can on a company, and taking all this information, trying to cross-reference it, listening to earnings call, reading transcripts. I'm doing all that stuff when I'm making a video, and I'm trying to get it to you in a concise manner. And people will say, well, your videos are 20 minutes long, they're too long. I just crammed 20 hours into 20 minutes. I can only do so much, but I'm not just saying, hey, these are 3 stocks to buy now. Oh, check this stock. Oh, they got this, That's not what this channel is, guys. And if that's what you're looking for, it's just not it. I'm sorry. Like this channel, I'm giving you due diligence that I do myself when I'm buying a stock that improves my success rate, my chances of winning, so that I can retire early, that I can grow my wealth. And I'm not going to be right every time, but if I'm putting in that effort, it's just like anything. If you're an athlete, you can have all the talent in the world, but if you don't practice, you're not going to be great. You can still be good with natural talent, but to be truly great, you got to put in work no matter what it is. The stock market's no different. You can't just show up and not practice and just show up at the game. And you know what I mean? And it's a bad analogy, but you got to put the work in. You got to do the practice. That's what this due diligence stuff's all about. And that's what I try to help the average day person. That's you guys are working your butts off, at your jobs. You don't have time to spend 40 hours a week on the stock market. I do. That's what I do for my job, right? So your support is really appreciated. I think it's a good way to wrap it up. Join us, YouTube, subscribe, hit the like button, drop me a comment, follow me on Twitter, follow me on Facebook, follow me on Instagram, TikTok. My voice is completely shot. If you're really hardcore and you want to be part of the squad, check out Patreon, but it is not necessary. So don't judge me for trying to have a Patreon to try to make a few dollars on this. It's not to squeeze you by any means. I'm giving you great information on YouTube for free. I'm taking it 5 levels higher on Patreon. And it's not just me. I'm talking about people that are smarter than I am, that have more money than I do, that are in Discord, that are sharing what they're doing with their portfolio every day. So if somebody buys a stock, there's a trading floor like, hey, I'm buying this much for this price. And it's really cool. And it's not to create FOMO. It's to show you like there's other people that think this is an opportunity. Maybe I should go explore it on my own. We're not financial advisors. We can't give financial advice. We can't tell you what to do with your money. We're providing a community of like-minded investors that are all trying to outperform the market and to enjoy life and retire early. And that's what we're doing. We're investing in the stock market, but we talk about personal finance in there. We've actually got a Gen Z, Joe Harkins in there. Shout out to him. He's got his own channel. He's got his own blog. He's in there. James Long's in there. He's doing stuff for Seeking Alpha. We've got, lots of different people in there. I'm doing stuff for Motley Fool. So this is not like this closed community. It's an open community with lots of really smart people all trying to learn and get better and cross-check each other. Like, hey, I think this is good. Well, hey, what about this? Did you look into this? This looks like a red flag to me. You can't do that by yourself. And you certainly can't do it on random free groups. The only way you can control that quality is to find people that have similar interests and that have some skin in the game, that have to pay a few bucks to get into the Discord. That's just how it is. But at the end of the day, if you don't want to do that, there's plenty of free information. YouTube right now, everything we just did, completely free. Twitter, the other ones, there's not a ton of information on there, but if you follow me on these, maybe if I get big enough, I'll do more. The two to focus on, the three, YouTube, Patreon, and Twitter, and the other ones, I'll try to do what I can on those, but my focus are on those first three. So I'm going to keep bringing videos every Tuesday and Thursday. Subscribe, like, comment. I'm out of energy. I'm out of breath. Hope this was helpful, guys. I appreciate your time and attention. Hope you have a great weekend. Take care. Peace.